Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing about what to expect in Nifty, Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing for the day and what the rollover data is suggesting at the current juncture. For the sixth consecutive session, the frontline indices ended in the red. Nifty closed the day 1.39% lower, while Bank Nifty ended the day 1.29% lower. Coming to the rollover data, Nifty for the first time in the last 6 years ended the October series on a negative note. Rollovers for Nifty futures were higher at 83.39% as compared to the previous month rollover data of 76%, and also if we see the last 3 months average, which stood at 79.12. The high rollovers along with a sharp decline of 3.4% for the series is indicating overall bearish sentiment and positioning on the short side. Market-wide rollover stood unchanged at 92% month on month. Looking at the market breadth within the F&O space, 22 stocks advanced while 78 stocks declined during the series. Also, if you see, only 9 stocks gained more than 5% for the series, while 17 stocks dipped over 10% and 57 stocks dipped between 10 to 15% during the series. While the overall texture is weak and market breadth is poor, the daily RSI is currently quoting 26.74, which was the lowest since the COVID fall. Even the daily stochastic is in oversold conditions at the current juncture. This indicates it's a time to be a bit watchful on taking aggressive short positions, as we could be in for a short term consolidation and breather could be on the cards for the index. Taking aggressive short positions would not be favorable at the current juncture. Coming to index levels, post the fall in the previous trading session, index for the day could witness resistance around 18,910, 18,940, and till these levels are not crossed, Nifty could retest a crucial support zone around 18,730, 18,700 on the downside. If the index witnesses a breakdown below 18,700, further selling pressure up to 18,570, 18,600 levels could be on the cards. While on the upside, if we see if the index manages to sustain above the levels of 18,940, we could be in for a short covering move up to the levels of 19,060, 19,100 on the upside. Major open interest build up for Nifty in November series, that is both the weekly and monthly. If we see the data, currently at the current juncture, 19,000 call, 19,100 call have OI built up, while on the downside 18,800 and 18,600 put implies strong support zone for the index. If you see the resistance zone based on the over data, it is somewhere around 19,250, 19,300 for the fresh series. Coming to Bank Nifty, the rollover for Bank Nifty was slightly lower at 79.31 versus 85.53 month on month, and even if we see the last 3 months average, it was at 80.65. Bank Nifty 2 has strongly underperformed the frontline indices for the second consecutive month, losing over 4.5% during the series. The index has closed at its 6-month low and has entered closed below 43,000 mark, its long-term moving average, that is its 200-day EMA, for the first time after the last week of March 2023. Going forward, the key resistance zone would be 42,540, 42,585, and till 42,585 is not crossed, index could test the levels of 41,900, 41,950 on the downside. Any move below the level of 41,900 could lead to further selling pressure in the index up to the levels of 41,660, 41,620 on the downside. Considering the current environment, the positive stocks at the current juncture are Axis Bank, ITC, BSE, Prestige, Trent, and Credit Access. And also important indicator to track at the current juncture is the volatility index. India VIX is consolidating in a narrow range of 9.5 to 12.8 zone since the last 102 trading sessions. Currently, it is on the verge of a consolidation breakout. The zone of 12.8 to 13 will act as a crucial resistance for India VIX, as this is the confluence of its 200 EMA, that is at 12.89, and the prior swing highs. Any sustainable move above the level of 13 would lead to a sharp upside rally in India VIX. In that case, it is likely to test the levels of 15.3 followed by 16.1 in the short term. While on the downside, the zone of 10.4 10.2 will act as the immediate support for India VIX. If we observe the FII data in the new series, FII index futures based long short ratio is at 10.87, which is the lowest since March 29, 2023. This means only 11% positions of FIIs in index futures is on the long side. While this data is negative, let us look at historically what has happened when the FIIs were massively short. In March 2023, when FIIs were just 9% long, the index, that is Nifty, rallied by 834 points during that series. In September 2022, FIIs were just 13% long and Nifty rallied 900 points, while in June 2022, FIIs were 15% long and the index rallied almost 1150 points on the upside. So just to summarize the content, the key support for Nifty being 18,650 and resistance at 19,000, while for Bank Nifty key support would be 41,900 level and resistance would be 42,600. Also, we would like to add to avoid aggressive short positions at the current lower levels with the risk reward being unfavorable at the current juncture. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.